The corporate earnings brigade kicks into high gear next week. Alcoa, as is traditional, will be the first Dow component to report. That's on Monday, and in fact, we will be interviewing CEO Klaus Kleinfeld after those results right here on Monday's broadcast. Meantime, analysts have a tepid view of earnings season overall. They say results among S&P 500 firms will edge up about 0.2% compared with the same period a year ago. That's all. However, our next guest has a more upbeat outlook. She's Christine Short, and she's with S&P Capital IQ. Good evening, Christine. Welcome. You think that earnings might go up something on the order overall of 4%. What do you see that the rest of the crowd doesn't?
Well, I think, anyone who's followed earnings season, we really start the season before Alcoa with a conservative estimate from analysts. We looked over the past 8 quarters and found that on average from the week before Alcoa reports to the time the earnings season is through, we see estimates go up by about 3.8%. So if historical trends are upheld, we can expect this season to see between 4 to 5% growth.
And yet that is relatively slow. Where will the standouts be? It won't be the cyclicals, will it?
Well, we're looking at a couple of leaders this quarter, one being telecom, up 9.5% is what analysts currently expect. Then not much of a story there. There's only 8 companies within telecom. Really what's happening is Sprint, Nextel had such a terrible year in 2012. They're expected to do a little bit better in the first quarter. We're seeing Metro PCS doing well as AT&T and Verizon. I think the real story is consumer discretionary. They're expected to be up 8.2%. And similar to the fourth quarter, we're seeing the strength in household durables, really the home builders there. So Lennar kicked it off a couple of weeks ago. They beat estimates, and they also reported growth of 225% when they reported. And we're expecting Pulte Homes and D.R. Horton to follow suit. And we're also seeing strength in the textiles and the luxury goods sector. So a lot of the retailers really expecting to pull through and post year-over-year growth.
As you look at those consumer discretionary, and you just mentioned it, one of the sort of subcategories within there is the home builders. So does that sort of skew the numbers in a way that overstates how good those numbers might be?
I think almost every industry within consumer discretionary is expecting some year-over-year growth. So no negative industries, but certainly home builders expecting 40% growth. And as I mentioned, textiles and luxury goods are expecting 50% growth. So they're very heavily weighted, so that is bringing the overall sector higher. But overall, all the industries within consumer discretionary are looking pretty strong at this point for the first quarter.
The fourth quarter GDP of fourth quarter of 2012 was pretty soggy, frankly. Is that going to show up in the numbers that some of the industrials, the materials companies report this quarter when we get underway?
Well, analysts think so, especially for the industrials. They're expected to be our biggest laggard, down about 2.5% is what the current estimate is. And again, like I said, same story with fourth quarter. We're really seeing weakness within machinery. That sector, that industry expected to be negative year over year. And if you look at some of the numbers, Caterpillar last quarter did very poorly, and they're expected to be down about 40% in the first quarter. That's followed by air freight and logistics. We saw FedEx come out with some pretty poor numbers a couple weeks ago, missing estimates by 15 cents. So we're expecting air freight and logistics also to be down year over year. Industrials being, one of the biggest laggards. Our second biggest laggard is energy. Really, that just has to do with year-over-year energy costs. Although they're quite high right now, in the year-ago quarter they were higher. So it's a difficult comparison to the first quarter of 2012.
Christine, have a great weekend. Thanks for being with us.
Thank you, you too.
Christine Short of S&P Capital IQ.